felt it would give us the best access to the strongest possible group of senior insurance decision makers.
Insurtech Insights is a must-do conference, I think, for the network that is built here.
Good morning, New York.
Good morning.
Before I begin, can I just ask by a quick show of hands, how many people in the room worked with or for Peter Hancock? Okay, so Peter, you have a friend. How many of you are glad that you worked for Peter Hancock? What a real pleasure for me. This is my second year getting the opportunity to open this conference, and today I get the opportunity to speak with a friend, colleague, and my board member, Peter Hancock. So let me real quick just introduce myself, the CEO of bolttech. And if you don't know bolttech, I would just say we are an international insurtech. We're operating on 3 continents, North America, Asia. And today I can tell my mic is a little bit of a problem, so I'll hold this. But today we operate in 31 countries across 3 continents. We probably are most well known for being one of the I'll say it loud, but we're probably most well known for being one of the few companies that has successfully navigated the fundraising world to just having our Series B fundraising round, and that was announced just a couple of weeks ago. So quite proud of that. Our lead, Tokyo Marine, who I know is here in the room. So the Tokyo Marine team, thank you, thank you, thank you. I'm going to switch to a regular mic here. Awesome, thank you. So, but the real reason for being here with you today is for me to have the opportunity to share the presence of my good friend, my mentor, Peter Hancock. For people who don't know Peter, Peter has had an amazing journey in financial services, coming out of JP Morgan and then ultimately navigating over to the insurance side of the world, where he's most well known as having been the CEO of AIG post-financial crisis. And by the way, Peter didn't create the global financial crisis. He joined AIG after the financial crisis, but without Peter, there would not be an AIG today, because he helped us to navigate a path through. And so I'm so proud to have the opportunity to call this man my mentor and this man my friend. But what you might not know about Peter, besides being on a really big stage, working for really big companies like JP Morgan Chase or AIG, you may not know that he is also on the board of a couple of insurtechs. He is on the board of one insurtech that I know really well, because he's on the bolttech board. But he's also on the board of another insurtech, Ledger Investing, which is a terrific insurtech. He also is an investor or an advisor to an investor. So he's an advisor to Portage. So people who want to get to know someone who has the perspective of an investor, the perspective of a Insurtech board member, and also someone who has run his own company. So Peter is, in fact, a founder. He is an entrepreneur. He is one of the most well-respected and well-known business leaders that I've ever come across. And so when you travel the world with Peter Hancock, you will know someone in every country, and you'll know someone who is really able to engage with you at a level that can bring out the best in you. So, Peter, I want to turn to you and just say, Peter, you've had an amazing journey. And when you think about your own journey, can you just talk a little bit about the key inflection points in that journey that have really shaped who you are and how you've thought about problem solving and leadership in everything that's come after those times?
Well, thank you very much. This is not working. Yeah. Thank you so much for inviting me to do this, and it was great to see a lot of familiar faces in the crowd. my own personal journey was very unplanned, and the theme is leadership. I never thought of myself as a leader, to be honest, until one moment when I was about 10 years old. And my coach in the cricket team said, "You are far from the best player in what the second 11, which is not even the best team, but you're the only one who seems to spot what's going on in the field and repositioning the players to where they can actually stop where the ball goes." So he made me captain. And there were, of the 11 players, I was probably the 10th worst player. And that was what the coach said to everybody. So the first thing is to acknowledge that leadership is acknowledging what you don't know, what you're not good at, and trying to get the best out of other people. And I'm incredibly fortunate to call you somebody who I have had the good fortune to work with. But you are one of several over my career who have worked with me closely and gone on to done much bigger things than I've ever done. And so, to me, that's the most important lesson I learned from that very early stage, was you don't have to be that good to find really good people to do things. And if you can somehow motivate them to work together, they do even amazing things. So I go right back there. But yeah, there have been a lot of other sort of steps in the professional journey. JP Morgan today is this huge company of over 250,000 people. When I left as CFO and Chief Risk Officer, it was only 18,000 people. But I've been there 20 years, during which it went through a massive transformation. So 90% of the profits by the time I left came from businesses that did not take place in the company 20 years earlier. And so even though it was a 100-year-old company, like a lot of the incumbent carriers in the insurance industry, it had to fundamentally change its relationship with technology to cope with the rapidly changing world of finance. And so I was very fortunate to be given a leadership position in a number of the businesses which use technology to scale and innovate. And so I've always been fascinated by the transformation opportunities. And so I find the Insurtech sector a really interesting sector for bringing about change.
Well, Peter, I mentioned earlier that, is this microphone working? All right. We just have to be very nimble. But I mentioned I mentioned earlier that you were an architect of the whole solution at AIG, and that is something that I'm so proud of, and I know that you are. But just imagine the enormity of that puzzle. So from a leadership perspective, I'm just very interested in how you even go about trying to put your head around solving a challenge as big as helping AIG repay over $180 billion to the U.S. government. So can you just comment on that for a moment?
Well, the first thing was to ignore the advice of my wife, who's sitting in the front row here. She's an Insurtech investor and a technologist herself, but she said, "Why on earth would you want to take this job offer that the Fed made me to go work at this company that was burning down called AIG?" And I hesitated for 2 months because I had this sort of notion that the government, when they own a company, is just impossible to deal with. And so I was very averse to that. And then I met the person the government had recently hired as a CEO, Bob Ben-Moshe, who had an extraordinary career himself. And Bob convinced me that there was hope in this burning building of salvaging a lot of value. And so I joined Bob to do what I could. And we couldn't have been more different in the way we approach things. And I learned a lot about leadership from him. And he said that the two things that I have to focus on, Bob, are employees. And I think the number was about 200,000 employees and 2.5 million agents. So in 200 countries. So I've got to somehow give them belief that this is doable, and customers, because without customers it's not going to work. And there were tens of millions of customers of AIG. So he focused on that, and then I scratched my head and said, well, what are we going to do with all of these stakeholders? And I had this naive belief that the government was one thing. No. The New York Fed, the Washington Fed, the US Treasury, and all of the special purpose vehicles that they'd set up to own and control the different assets that they had taken off the main balance sheet of AIG. And so what we had was a logjam of competing stakeholders, about 10 of them, who could all veto any solution that would get us out of the mess. And so I think that the most important insight was to figure out the difference in value of the company as a going concern versus a liquidation. And the difference between the two that we estimated was about $14 billion. And then we gave a name to it, the peace dividend. If all of you stakeholders could stop fighting for just 1 minute, we can share $14 billion among us. And so that gave each of these players a reason to compromise and reach a settlement that ended up returning all $180 billion to the US taxpayer plus another 23 extra, and allowing the shareholders to recover from a horrible crisis, and those who put new money in, and we had to place 5 equity offerings in 18 months. And your 1.6 valuation in your Series B is it's pretty good, but we did 1 equity offering of $22 billion out of 5 in 18 months. But you were leading that too. So that's because it was a going concern that was just 92% owned by the U.S. government, and that process of getting all of the players, whether it's policyholders, new customers, the government, to all see that there was something worth preserving, and also selling. We sold 90 companies, unwound $2 trillion of derivatives, de-risked the company as a way to simplify what had become this very complex company. And I think the complexity of so many of the incumbent carriers, and AIG was the most complex of them all, is a huge opportunity for all of you, because by focusing on solving very specific pain points in the insurance value chain, I think it's a way to really add value to companies that have lost their way because of the complexity. So simplifying AIG was a big part of how we were able to do it. So even after we sold those companies, it was, as you know well, still one of the largest insurers in the world. So I think that was probably the answer. How do you get competing stakeholders to work together, and how do you simplify the value proposition to something that can be actually executed? Because I think it had gone too far astray from its core competence.
I love that, and sometimes I've used a phrase that you've got to cooperate to graduate. So that was a line that we used to use when I was in graduate school, and that's because you couldn't do it by yourself. Everything was a team effort, and if the industry could learn to work together as an ecosystem and to learn to work together as enabling partners, imagine how much more progress we could make. So Peter, this is a session about lessons in leadership and sharing some of your thoughts. You commented a little bit about you being a leader, but very interested if maybe you want to share some of your thoughts about what really makes a great leader. But also, in your experience, you've also learned lessons about things that when you were in a leadership position maybe didn't go so well. And if you had one takeaway of something you might change about what you did or didn't do as a leader, what might that be?
Well, I think that one of the big challenges in leadership is that one of your most important roles as a leader is coordination. You may have many people who are smarter, harder working, more insightful than you, but if they all do their own thing, the team never really becomes coherent. And so you act as a coordinator. To do that, you need some level of consistency of what you're asking people to do. So let's say you set a bunch of goals. As we all know, the world changes. And so as a leader, you'd love to move the goalpost because the world's changed. But if you move the goalpost too quickly, then the team has no idea where they're going. so you get viewed as a flip-flopper, and the organization just doesn't pull together. So you've got to choose your moments to pivot or change the objectives. And there's this tension. I, for sure, am somebody who loves to sort of start with a clean piece of paper every morning. And that would drive my team nuts. So I'd have to sort of bite my lip and say, no, no, no. Here's what we set as the goals 6 months ago, a year ago, 5 years ago. And we're going to stick to those that we have to so that people actually can stay on the same track. And only make the changes that are absolutely necessary. So resisting that temptation to flip-flop, even if the world is changing, is, I think, super important. So that leads to how do you set the right kinds of goals that are more enduring. If you say, for instance, that we're going to grow our revenue this year by 60% and get everybody excited by 60%, and you're only doing 50%, then I think that the world has changed a lot this year versus last year when you set the goal. Do you change the objective to 50%, or do you say, well, sales growth isn't the only measure of success? Growing value is perhaps more important than growing volume. So how do you come up with ways to create enduring goals which will sustain themselves through very different macroeconomic and other circumstances? I think helps relieve that tension between being a flip-flopper and sticking to obsolete goals which don't make sense anymore.
So, Peter, I'm going to start by making a simple observation, and I'm going to say, you're the hardest boss I've ever had to work for. Some people in the crowd might say, oh boy, now I know where you got it from, because I might be the hardest person that they've had to work for. But for the record, it was that which made me seek you out to become a board member at bolttech, because I wanted someone who was a really broad thinker, someone who challenged me every day, and who was also a friend. And so one of the things that I learned from you was select your board members carefully and be very thoughtful about who you work with and who's advising you from a board perspective. What do you think about that?
Well, that's a very loaded question, having been fired by my board when I was at AIG. And I think the board have to probably examine themselves to see when the share price will return to where it was when I left, but it's another story again. But I think, joking aside, I think it's really hard to deal with the board. The nature of a good board is they all have their own agendas, and so it's not like having a single boss. You need to understand the benefits of the diversity of insights that a good board can provide, but also the challenge they challenge they create when you're confronted with in our situation at AIG. It was an activist attack by Carl Icahn. And so whatever challenge you're dealing with, there's going to be moments where you want the board to pull together. And that's really tricky. And so you hope that even though board meetings feel like an annoying distraction from actually executing when you don't have enough people and enough hours to get everything done, you're investing in relationships with those board members that will really become very valuable at moments of crisis. And I think that I could have done that better, to be honest. I was too engaged internally and with customers, and not enough with really understanding each board member. And I would urge those of you here who are dealing with boards to take the time to build those relationships.
I think that's great advice. You can give advice in a lot of other very interesting ways. One of the things that I'm very interested in is your view on sort of this overall crazy macroeconomic, geopolitical environment that we face today. You've faced all of these things before, and you've successfully navigated through a lot of it. And I'm just very interested if maybe there's lessons you want to share there or perspectives you want to share there about how to navigate through this pretty crazy time.
Well, I'm going to do another show of hands thing. How many people are actuaries here? Oh, good, not too many. Because I have a beef with the actuarial profession, which is they tend to extrapolate the past. And that's not entirely true, but they do that a lot. And I think that works until you have a regime shift, whether it's a war, a pandemic, or something that just wasn't in the historical data. And so, I do think that this issue of how do you go through scenarios ahead of time so that you're not, panicked when something really significant happens is really important. And it's not that there's a likelihood that there's going to be a sudden war breakout or a pandemic or God forbid, this huge flood that's happening in the last 2 days or whatever. It's, how do you go through enough exercises together with your leadership team to say, if this happened, what would we do? And it may not happen exactly as you practiced, but I just think that the mental exercise of saying that just extrapolating the path and just going up or down 5% from the base case, that's not going to cut it when there's a sudden regime shift. And obviously the U.S. banking industry, the regional banks in particular, had a major wake-up call in the last few months as they realized that one of the most basic rules in banking and managing interest rate risk was going to become something again after 10 years of being asleep. So I think that it's really important to look at history. It doesn't repeat itself, as Mark Twain said, it rhymes. And so, where can you find those examples from history where you got really blindsided by, if you stuck to the recent past as a way to guess what's going to happen next?
Yeah, so I think it's probably fair to make a prediction that rates will go up, and then they'll go down, and then they'll probably go up again. And so none of this should be a surprise, I think, is your message. And so being prepared to be able to deal with any of those environments is very important. You have, over time, also been a very engaged member of the insurance industry. You've seen this as a industry that is maybe not the fastest moving machine known to mankind. And I'm just very interested in your thoughts about why has it been so slow to change? And if you were king, what might you do with your magic wand to make it change even better or even faster?
Well, it's all relative. I think that in many ways it's very fast. And I think obviously technology is an accelerator, an accelerant. But in my retirement, I've become an avid gardener, which I never took any interest in before. I think the pandemic and being confined to the house helped do that. And the garden is really slow to evolve. I'm planting trees, which probably won't have changed much when I die. And so I think it's fair to say that the insurance industry is very organic. It grows in ways that are not sort of top-down driven, but really bottom-up driven by entrepreneurial people in many different parts of the value chain, trying to solve micro problems, which together bring about a world where we're thinking about risk, managing risk, and helping people do other things in life, which would be impossible without insurance. And so I think that it's messy. And there are a lot of agents or decision makers who have their own agendas, which inevitably means it's hard to change them all at the same time. But there's certain trends which I think do cut across these constituencies. I think naive beliefs that an idea that works in one country really well will work in others. And I think my favorite example of this is one of my favorite companies in any industry, long before I got into insurance, is Progressive. They do auto insurance in the United States really, really well, and they have done it really well for a long time. But they pretty quickly figured out it was really hard to do it in other countries, so they haven't been tempted to go global with that model. And I think that the discipline to know how to stretch the ideas you have from one place to the other is really, some things are global, some things are local, and it's a very complex industry with these constraints on extrapolating simple ideas everywhere. And I think that there's some other industries where, you know, an iPhone in this country is the same as an iPhone in most other countries. And so there's some technologies that just scale globally really easily and others that don't. And I think insurance is one of those things that's highly regulated, very idiosyncratic to the types of issues that exist in different countries and within different industries within a single country, you know, how you insure it.
Okay, I'm going to do a quick lightning round with you. So as I do this, I'll give you a choice. You can only choose one or the other, and you can give your answer for why. So Peter, which is a bigger challenge? Is it a bigger challenge dealing with the geopolitical environment or dealing with the macroeconomic environment?
Definitely the geopolitical. I think you know, there's macroeconomic models which are pretty crappy, to be honest. I sit on the board of the NBER, which is a sort of academic economist thing, and you know, it's. I think they've increasingly retreated to microeconomics, where you actually get some success because macro is so difficult. But compared to that, I think geopolitics is 10 times more difficult because you've got so much unpredictability, and we need to navigate both, and they're not separable; they're totally intertwined.
Being a board member or being the CEO?
Being the CEO is a very, I'm a lot happier as a board member, put it that way. A lot happier. But I travel coach now.
I travel coach too. Okay, so Peter, do you think that your proudest moment in your career is something personal, or is something more about the companies or the people that you've worked with?
I think, you know, my proudest moments is when I see people who I have worked with go on to do amazing things. And, you know, seeing you do this incredible fundraising and just the general growth of bolttech is one of them. But, you know, you're not alone. There are a few other people who I've had the pleasure of working with over my career who've gone on to do extraordinary things, run very large banks, funds, and I take such joy in seeing them succeed, and I had very vicarious pleasure in watching them and enjoying that. So that's probably it.
The future of Insurtech, or the future of the established players in the insurance industry, which of those do you think is brighter?
I think that both need to acknowledge that technology is not an end in itself, but a way of getting from A to B more efficiently and faster. And the incumbents that get that joke will do great, and they may do so by working with, in partnership with Insurtechs, acquiring Insurtechs, and giving them the room to innovate. But I think there'll be success in both. I don't think it's either or. You said I have to pick one. Yeah. Oh, given the crowd, Insurtechs, obviously.
I'm only kidding. I would agree with you. I think maybe my next question will sort of lead you back there, which is it better to be an enabler or a disruptor?
I think an enabler. I think disrupting is, you know, creating, you know, a false enemy to attack. It's a sort of hostile thought, and I think that you know, better to win with honey, and I think that there's an awful lot of opportunities to reduce pain in a value chain by being an enabler, rather than trying to just take a head-on attack on people who are doing the best they can with the tools they have. So I say enabler.
We're winding up on time, and so I do want to ask you just to make kind of if you could do one thing in the next stage of your career, of your life, what would excite you the most professionally, and what would your dream be personally?
Well, I think that that's a very existential question for 52 seconds. I'm having the time of my life. I feel incredibly lucky to have the friends, family, and career that I've had, and the means to enjoy it. I hope to be healthy and keep on learning. I think learning, and one of my motivations, frankly, for getting involved in the Insurtech sector is I meet so many people with interesting ideas, and I learn from them all the time. And so if I can give them a little bit back in exchange, that's great. But I think it's to stay healthy, keep learning, and have fun, and spend more time with my grandchildren.
Hear, hear. 9 seconds to go. Time for us to wrap up. I just want to say, Peter, on behalf of everyone, thank you for coming and sharing with us. You're a board member, you're an investor, you're a founder, you've run large established companies. Your perspective is amazing. I hope people get the opportunity to experience time with you the same way that I have. Thank you. Thank you for being a mentor. Thank you for being a friend. And thank you for giving back.